Hello, friends. You are on the Easy Money channel. The price of Bitcoin fell by 10%, which completely erased the gains of the previous days. The intraday price drop was the largest since March 2023. The main fuel for the continuation of the fall was the liquidation of a huge amount of credit positions worth at least $400 million within 2 hours. And all this is happening ahead of the SEC's January 10 deadline. Before this date, we must receive a decision on spot Bitcoin ETFs. Will the approval of spot Bitcoin ETF be an event that can be called sell on the news? K33 research gives a 75% chance of this. But the starting point for the price drop was a countdown from Matrix Financial Company, which published an article saying that, in their opinion, the SEC will reject all applications this month. Their arguments are, firstly, politics, since the 5 members of the SEC Commission who have the right to vote on this issue are Democrats, and Democrats do not like crypto. Secondly, applicants such as Fidelity, BlackRock and others have still not complied with all. According to Patrick Sport, it is clear that this is just the opinion of one analytical company, but its entire argumentation was debunked by Alex Thorn. He writes that some of the arguments make no sense. The first argument is the information that the impetus for the bullish run of Bitcoin was the September filing of an application by Franklin Templeton for a Bitcoin ETF. No mention that Invesco, WisdomTree, Fidelity and ARK Invest have already filed and all have more assets under management than Franklin. Franklin Templeton ranks only 25th on the list of largest asset managers. Secondly, the report questions the fact that all ETF applications still lack compliance with the SEC's critical requirements. Here Matrix says that all applicants have joint market surveillance agreements with Coinbase, but Coinbase is only 11% of the spot market, so it doesn't matter. In addition, Matrix accidentally or intentionally ignored the decision of the DC Court of Appeals, which refuted all allegations of a surveillance partnership between Coinbase and applicants to launch spot Bitcoin ETFs, arguing that surveillance of futures markets would be sufficient since futures and spot markets are mathematically indistinguishable. In other words, what happened? These clowns are simply manipulating the market. Yes, Matrix heavily manipulated the market. Look what they wrote. January 2, 2024. Matrix Board hints at imminent approval of SECs for cellular Bitcoin ETF possibly within the next 48 hours. And this is what they wrote less than 24 hours after that on January 3, 2024. Which will reject all spot Bitcoin ETFs in January, and final approval may not come until the second quarter of this year. What else is interesting? That on January 3, BlackRock planned to purchase $10 million worth of Bitcoin to fund its spot Bitcoin ETF. January 3 is exactly the day it happened. This is the price drop. $45,000 to $41,000. I've seen $40,000 on some exchanges. In other words, the price of Bitcoin fell when BlackRock planned to buy it. This is manipulation. And all for the sake of your money. Your coins, your Bitcoins. Of course, another reason is that Jim Cramer has expressed great positivity towards the future of Bitcoin. It is known that after the words of Jim Cramer, everything happens the other way around. Meanwhile, BlackRock JP Morgan instructs employees to be prepared for the approval of Bitcoin typhus. Employees have been instructed to ensure they are adequately prepared for the rapid turn of events, a JP Morgan source said. Let me also remind you that back in November last year, SEC postponed the consideration of Bitcoin ETF applications from Hashdex and Franklin for 24 business days. And the only reason for this was to agree on a period for the potential simultaneous approval of all applications. So, assuming the application is approved, Will we see a sale on the news? As a trader, I'm a little scared when everything goes up. I think the speculative fever around ETFs has probably reached a crescendo this week. So yes, could a sell-off happen? Absolutely. But I think this will be an ideal opportunity to buy because many people still cannot buy Bitcoin. So for years to come, once the ETF is approved, private funds, pension funds, and others will be buying Bitcoin. Currently, 8 countries around the world already offer spot Bitcoin products. Today Canada is in the lead. There are already spot Bitcoin ETFs in Canada. But one of the reasons why people think that we are expected to sell the news is that the popularity of this ETF in Canada was not as high as expected. And I think this huge rise in prices in the crypto market was due to the rumors of ETF adoption. But if anyone had any doubts that these applications would never be approved at all, as luck would have it, the company Fidelity just filed an application for registration of securities for its cellular Bitcoin ETF. This is the Form 8A registration statement used by companies to register securities with the U.S. Securities and Exchange Commission. For an ETF awaiting approval, filing this form can be a huge step. This form shows that the train is not stopping. On the contrary, it moves even faster. And there is another proof of this. Chicago CBOE Exchange approved Fidelity's application to list shares and spot Bitcoin ETF. Yes, I think everyone is worrying too much about what's going to happen next week. That's actually what's happening with JP Morgan and BlackRock endorsing Bitcoin as an institutional asset and ETF endorsements really opening the door to those institutional cash flows. For a long time, Bitcoin was primarily a retail asset. They now recognize that Bitcoin is the best asset. You talk about volatility, but you miss the point that passive investing in Bitcoin over the long term brings most other assets to their knees. If you started averaging from $69,000 to today, you would still have a 67% return compared to 23% on the Nasdaq or 11% on gold. Bonds brought negative returns altogether. So this story is much more serious than just ETF is the recognition of Bitcoin. BlackRock and JP Morgan. But not only them friends. JP Morgan, one of the largest U.S. banks, is also negotiating to become an authorized participant for BlackRock and Grayscale Bitcoin ETF. Another large bank, Morgan Stanley, allowed its fund to invest in Bitcoin through a company in the Cayman Islands. The bank was allowed to invest up to 25% of its total assets. The fund now has $140 million. Also, SEC documents show that funds are making changes to their documentation. They now allow up to 15% of their total assets to be invested in a Bitcoin ETF. In a statement, Advisor Preferred Trust notified the SEC that it can now hold up to 15% of its assets in a spot Bitcoin ETF from Grace Kelly, which has not yet been accepted. But they are already ready to invest in it. Arco Asset Management Trust also plans to hold up to 50% of its assets in a spot Bitcoin ETF from Grace Kelly and a futures Bitcoin ETF from Share. In fact, we're seeing a pattern emerge where funds are starting to amend their securities to the point that they can invest between 15 and 50% of their capital in spot Bitcoin ETFs. However, the fact that they can do this does not mean that they are obliged to do it. You need to understand this. But such changes still make me happy because they open the door to potential investments in Bitcoin. They are beginning to think that yesterday's dam was just a big hunt for money and coins. This means that such a liquidation of credit positions from the market is actually useful, since it relieves overheating. No one sees the future, but following the example of the gold spot ETF that was approved here, and, as we see, after this there was a price collapse of 50%, perhaps Bitcoin is expecting something similar. Especially if the market does not see immediate rush demand among investors for a new Bitcoin product in the United States. But in the long run, The launch of a gold ETF led to big growth over the next 5 years. Yes, there were corrections, but overall it was a big increase. And finally, although today Bitcoin is falling, Michael Saylor, founder of MicroStrategy, is selling nearly $216 million worth of company stock. For what? To buy more Bitcoins. But to your personal account, and not to the company's account. In 2014, I was granted an option for 400,000 shares that expires in April. For almost 10 years, the company has paid me a salary of $1 at my request. I also decided not to receive any cash bonuses. Exercising this option will allow me to resolve some financial obligations, as well as purchase additional Bitcoins for my personal account. According to my trading plan, I plan to sell 5,000 shares each trading day starting January 2, 2024 and ending April 25. Subject to the minimum selling price. This means that the sale will take place over a period of almost 4 months. But I remain optimistic about the prospects for MicroStrategy. And I should note that my share in the company, even after these sales, will remain very significant. That's all. This is an easy money project. If the video was useful, don't forget to like it. It helps the channel develop and helps me find motivation to create new content. Thank you for watching. See you in the new video.